SMX Security Matters PLC Due Diligence Report, Executive Summary. SMX NASDAQ. SMX develops authentication, brand protection, and track hand trace technologies. It uses proprietary XRF material fingerprinting and tokenization for anti-counterfeit, supply chain, provenance, and circular economy use cases. It has IP, Improve, Pepside, partnerships, Brinks, PepsiCo, Continental, Intel, and recent capital raises. Financials show minimal revenue, large losses, cash constraints, and reliance on financing. It is a higher-risk early commercialization story with possible upside if pilots turn into contracts. 1. Company overview. Business model, authentication, marking, and tracking solutions linked to digital ledgers. Markets, precious metals, luxury goods, plastics recycling, packaging, electronics, food and beverage. Competitive position. Differentiator equals XRF marker, detector patents. Competes with RFID, QR, blockchain supply chain firms. Industry outlook. Regulatory push for traceability and recycling is a tailwind. Execution and adoption are main risks. Management board, small team. Executives with security, logistics backgrounds, governance details, and SEC filings. 2. Financial health revenue. Minimal. Net income, large net losses, tens of millions. Margins. Negative gross and operating margins. Balance sheet. Low cash. Reliant on financing. Convertible secured notes common. Debt. Elevated versus equity. Cash flow. Negative operating cash flow. Heavy burn. Recent financing. $11 million growth capital announced August 2025 tranche-based. Total 2025 financing $20 million. Bottom line, financially fragile, reliant on dilution and external capital. 3. Valuation market cap. Tiny, in single-digit millions. Multiples. PE PEG, EV, EBITDA. Not meaningful loss-making. B. Distortive. Peer set no perfect comps. Industry peers are private or part of larger corporates. 4. Growth potential market size, anti-counterfeit and traceability equals multi-billion global TAM. Expansion, POCs with multinationals. But no large recurring contracts disclosed. R&D pipeline patent, especially in XRF marking. Customer adoption. Currently at pilot POC stage. Scaling risk remains high. 5. Risk factors business. Difficulty converting pilots into contracts. Financial dependence on external financing and dilutive raises. Competitive. Larger, better-funded firms with RFID blockchain solutions. Regulatory standards may change. Liquidity. Tiny float, volatile stock. Legal IP. Costly to enforce patents. 6. Dividends and returns. No dividend history. No buybacks. Returns depend solely on stock price appreciation or buyout. 7. Market sentiment analyst coverage. Minimal. Institutional interest. Limited. Insider lockups. Several note amendments and lockups in filings. Short interest. Limited data, but liquidity is very thin. 8. Macroeconomic sensitivity. Sensitive to higher rates, inflation due to financing dependence. FX commodity, impacts minor. ESG regulations may help traceability mandates. 9. Technical analysis snapshot view. High volatility, thin trading. Support resistance, unreliable due to illiquidity. Beta greater than 2 in some services. 10. Corporate governance board structure and exec comp disclosed in 2OF. Multiple amendments to debt. Notes suggest complex governance. 11. Supply chain exposure relies on hardware components and reagents. Partnerships, for example. Brinks Lab in Dubai support operations, but don't remove supply risk. 12. ESG. Sustainability promotes circular economy and recycling traceability. Positions itself as ESG friendly, but no major third-party ESG ratings yet. 13. Customer base. Publicly highlights pilots with large firms. No disclosed recurring multi-year contracts yet. High customer concentration risk. 14. Insider and institutional data. Insider and noteholder ownership significant. Institutional ownership tiny. 15. M&A activity. No M&A history. Could be a takeover target if tech proves valuable. 16. Innovation and moat owns patents and XRF marking and detection. Enforceability and commercialization remain untested. 17. Cyclicality luxury goods equals cyclical. Compliance-driven, demand traceability, recycling, is more stable. 18. Tax and accounting policies and contingencies in 20F. Multiple debt amendments and conversions must be scrutinized. 19. Employees and labor, very small team, dozens. Key person risk is high. 20. International exposure. HQ in Ireland. Operations in Europe and Middle East. Dubai lab. Partners and pilots global. FX and regulatory exposure in multiple jurisdictions. Investment view bull case. Unique IP, big market tailwinds, strong partners, successful commercialization. Bear case. No recurring revenue. Heavy dilution, financing risk, execution failure. Reality. Very high-risk microcap, position sizing, and caution critical.